Today we are marking the 51st year of nationalization of banks, and we need to analyze the background which forced the then government nationalizing the banks. During that period, the major institutions, credit institutions, were under the direct control and influence of big industries. Between 47 and 55, there were around 361 instances of bank failures, with many depositors losing their savings along with their faith in the banking system. On an average, every year, 35 private banks failed between 1955 and 1967. The share of agriculture credit between 1951 and 1967 remained stagnant at 2.2% only. The income inequality was high and wealth was concentrated at the hands of a few. 10% of the population, they had 40% of the income during 1960. Accordingly, the government was forced, and the then Prime Minister, Mrs. Indira Gandhi, she nationalized the banks through an ordinance on 19 July 1969. The bank nationalization, although it aimed to attain three primary objectives. First was to break the nexus between the banks and the big businesses who were disproportionately cornering the bank finance for their narrow selfish interests. Second was to ensure that balanced flow of credit to all productive sectors across various regions and social groups of the country. And third, which was most important because the banks were failing, is to provide stability to the banking system by preventing bank failures and speculative activities. The efficiency of a bank nationalization could be seen in the increase in bank by the public banks. 5 years of nationalization, half of around 10,500 new branches were opened between 1969 and 75 were in rural areas. Thereby, the share of rural branches was increased. It got increased from 17% to 36%. By 1990, total bank branches stood at around 60,000, with 58% of those branches were in rural areas. The share of agriculture credit, it went up from 2.2% in 1967 to around 16% in 1989. This was because of private sector lending. And as of 1991, the more than 90% of the accounts were of small borrowers with borrowing less than 25,000. As Professor Dinesh Agarwal has rightly pointed out, that we have seen green revolution, we have seen white revolution in milk production, we have seen blue revolution, and these were all successful because of bank credit. Banks were more into mass banking than into class banking. The income inequality also came down during the period. Despite there were concerns about the operational efficiency of the banks, customer service, profitability, and the asset quality. But if you look back, it is commendable that not a single nationalized bank has failed or faced liquidation till date, unlike pre-1969, where these were in private hands, when we were having around 35 banks failing every year. The nationalized banks contributed in the India's emergence as one of the largest developing economies in the world. It became self-sufficient in food grains, as Professor Agarwal has rightly pointed out, and made significant strides in financial inclusion, including, if you see the recent Jan Dhan Yojana, how much we have contributed and how much the private banks they have contributed, and there was a substantial contribution made by these banks to the growth of the infrastructure of the country. Now, what happened after 1991 when the economy was opened up? One after another, committees were formed, and these committees, they guided by the policies of IMF and World Bank, made recommendations for the banking sector reforms. The agenda was to privatize the public sector banks. The focus of the public sector banks shifted from social banking to profit. More number of private banks were allowed, and public sector banks were asked to compete with the private players, but without any autonomy to function. The government intervention and influences of corporates is more in public sector banks now. Now, if you see the various benchmarks and parameters which are set to assess the performance of nationalized banks, it shifted the focus totally. And these were done to weaken and privatize the banks by the successive governments. We started competing with private banks. We have so much of regulations by the regulator imposed on us, but the private banks are given free hand. NPA provisioning norms were imported from developed countries, where we should have a different NPA provisioning norms for different sector. We import some norms and we just enforce it on our banks. Basel III norms was introduced. One after another, stringent norms, measures were imposed by the regulator, such as asset quality review, And even recently, as you know, the banks were put under prompt corrective action, and most of the public sector banks, they were not allowed to lend. Now, credit is no more a social objective for the public sector banks. Private sector lending norms are diluted. As you have rightly pointed out, sir, the limit for small, micro and medium enterprises were raised repeatedly to favor the bigger industries to come under private sector. Now, the definition of agriculture activities and allied agriculture activities, it is enlarged, and many, the other day when we had Professor Ram Kumar from TIS, he pointed out one case where the Pepsi was given a loan of 1,000 crore for setting up a potato chips industry. So in that way, the corporates are favored in the name of allied agriculture activities. Instead of giving loans to agriculture sector, now banks are allowed to invest in this infrastructure development fund of NABARD. Now, if public sector banks are assessed on market set parameters, this puts a big question mark before the PSBs, whether before all of us, whether the PSBs are expected to earn profit or to serve the people. What is the use of having a 50% stake if we are unable to do business? Today, people, we feel comfortable that we are owned by the government and having a 50% stake. Now, the way our products are becoming uncompetitive and the way we are having shortage of staff in the banks, we are not in a position to even take care to the working customers that is coming to our branches, leave aside marketing for new businesses. In the last 10 years, if we have seen that we have written off around 7 lakh crores of NPAs, of which 80% was done in from 2014 to 19. And you know, in public sector banks, it was because of the IMF and World Bank, their guided policies. Then in 2000, 2001, a VRS came. In the name of confederation, VRS was given in the banking sector, and around 1 lakh of our employees, they have left the banks. And due to subsequent ban of around 10 years on recruitment, the public sector banks are facing huge shortage of staff. And this has forced the banks to concentrate on large credits rather than entertaining the small borrowers and small credits. Instead of opening branches, now today we are recruiting business correspondents on contract service. Today, PSBs are merged and we have only 12 public banks. Now, corporates like Reliance, Airtel, Paytm, they have been allowed to start payment banks. Today, when a public sector banks are no more lending to the small borrowers and to the weaker section. The microfinance institutions have taken that space, and you will be surprised to know that they are charging very high interest rate, and it's ranging from 18 to 21%, and we are given to understand in many places it goes up to 24 to 28%. Corporate houses, they have now total control over the credit decisions of the public sector banks. There is no accountability or public debate on write-offs of corporate loans. The IBC is also favoring the corporates, and banks are taking huge haircut on NPAs. Today, the income inequality, if you see, it is now 10% owning 77% of the wealth, which was prior to nationalization, it was 10% owning 40% of the wealth. The Prime Minister of our country, who is very vocal that the government has no business to be in business, and with the dismantling of Planning Commission and Niti Aayog being formed, the agenda is very clear before us, is to privatize all sectors. Now, today we need to introspect that whether we, because of nationalization, we have come out of the whatever challenges that were there prior to nationalization, or whether we are in a deeper crisis. I firmly believe that the country needs more nationalized bank today, and today we are in a deeper crisis now, because if you see, the income inequality has grown up, and the corporates have total control on the public sector banks, and today they are also into the business of banking. The FDI norms is relaxed, and foreign banks, foreign giants, they will also take the stake in our private banks. They have already taken stake. And if the public sector banks, they fail in creation of wealth for the bottom half of the population, days are not far that we are destined for a revolution. The government cannot satisfy majority of people with freebies and with some false hopes. So I strongly believe today that we need to introspect, and the need for nationalized bank is more today. And I therefore request all the participants and the speakers today to deliberate on this issue. I thank the organizers for giving me an opportunity to speak before all of you. Thank you, sir.